Hello everybody, Gbenga Olatunji here, welcoming you to GJAMES channel. We want to quickly dive into computation of Paye tax because we had earlier dealt with the theoretical aspect of it. So we are going to learn who pays Paye tax. We are going to understand in this video who and how to determine chargeable or taxable income, how to determine chargeable income, and also the tax rate applicable in computation of Paye tax is a graduating or progressive tax rate. So let's go into our tax board and begin to do the computation right away. Don't forget we are going to the computation because we had earlier dealt with the theoretical. So what I'm going to do is to put the link in the description for the theoretical video so that people that missed that could watch it then understand this better. So computation of Paye. Okay. Then we should have one name for our organization. Like I always say in the exams, always remember to name the company that the question has named. So what name should we give the company? Let's say okay, any name. Mr. ABC taxpayer. Mr. ABC taxpayer is what we are computing for. The first thing when you are computing Paye tax is to try to understand. Basically they are going to give you also the monthly. So let's say ABC has a monthly basis as a bit of a big man or a big lady, 700,000 per month. So what we need to do first is to analyze it. That is, what will be the annual income of Mr. or Mrs. ABC. So annual income, now it's an annual gross anyway, will be figure marshal. Press the calculator. If you compute it right, you should get 8.4. So the annual income of anybody earning 700,000 is 8.4. Now, what are the statutory allowances and reliefs? Don't forget the alimony does not exist anymore. Wife allowance, children allowance, husband allowance, name it, dependent allowance or allowances, they do not exist anymore. So what we have now is a personal condensed relief that we call Consolidated Relief Allowance, CRA, which basically gives us the first 200,000 to ourselves. So ABC, we have 200,000 as personal allowance to himself or herself. Also 20% of the annual, 20% of the annual income. Actually that 200 is either 200 or 1% of the annual, but basically to arrive at a figure that will be higher than 200,000 with 1% annualization is not impossible, but it's a bit difficult. So usually you have in HR payroll, generally 200 as a standard. It's not a standard figure. If you earn more than that and your 1% could be more than 200,000, you are going to have that figure as your personal CRA, that is Consolidated Relief Allowance. Then you had the 20% of your gross income. So figure marshals, what would be the 20% of 8.4? So plus 20% of 8.4. So we should have 1.680. This is the figure that we should have. Let me bold in it. And this is the very first major calculation that we should arrive at. So having computed our personal reliefs, now some other reliefs that we are entitled to are National Housing Insurance Scheme, National Health Fund, and pension. So let's assume, because not all organizations will enroll us for National Housing Insurance Scheme or Housing Fund, but pension is more mandatory and monitored. So let's say our organization is remitting pension and we too are to remit pension also. So we are now going to, as the person paying tax now, as the person paying pension now, you are to remit at least 8%, and the employer will remit at least 10% or more. You too will remit 8% or more. So let's use 8%, that's the least you can remit. So the 8% of your gross, don't forget 8.4, we should arrive at a figure around 672,000 per annum. So don't forget, this figure is your pension. If the organization is on the housing or health scheme, these are allowable deductions for you. So it simply means you are going to have all these deducted from your, please permit me with all this computation that we are doing on the board. I'm trying to align it, but it's not that forthcoming. Then let's waste time on it. So if your organization is on HIIF, you will have the relief. If your organization is on NHF, we call it, you will have your relief. But if they are not, it's not going to be deductible. Then we can calculate your tax implication from here now. So if we are to calculate your tax implication from here, what are we going to arrive at? Figure marshals. So we call it, at the end of the day, we want to know what part of your income will be chargeable to tax. So we call it chargeable income. So we want to calculate chargeable income now. So in calculating chargeable income, we need to take away your reliefs from the main income. So we need to add The 200, we need to add the 1.6. Let me put that 200 separately so that we will not mix it up. So this 200, you are entitled to it, your personal. Don't forget, it's a standard figure. I want to believe that we'll remember when we put it there. So it's a standard figure. Add 200 to 1.680 to pension. We should arrive at 2.5. So this 2.5 is not going to be taxed. So at the end of the day, this is not going to be taxed. Excuse me. So the total of, so this is not chargeable, right? We are yet to have chargeable. So this is the total of all our reliefs. RSA, RS, Consolidated Relief Allowance. So we now have your chargeable. So when we take away 2.5 from 8.4, take away this from this, now we should have 5.8, 5,848,000 will be chargeable to tax. So why this is not going to be affected by the tax rate, we are going to put the tax rate on this right about now. So this is how to determine chargeable income or taxable income. The first one has been answered. Who is to pay payee? The income earners, the sole proprietorship, executors, and the rest of people that need to be personally liable to tax. That is, they are not an organization that pays company income tax. So the next step now is to calculate our tax liability as individual taxpayer. So quickly, I'm rubbing this off. I hope I'm allowed. Let's rub our personal income. So now we have our chargeable income. Let me quickly take us back to an important slide on the rates. So this is the rate for calculating our personal income tax. So having said that, let's quickly go back to our tax board. So the first rate we need to take care of is 7%. So the 7% of the first 300. Please note that this is a standard rule. It cannot be bent. The first 300,000 of your income will be taxed using 7%. So government is going to take 7% of it. That is what it means. And it will calculate 7% of our first 300,000 irrespective of what we earn. Even though now we are using 8.4 as our annual income, we are going to have 21,000 taken per annum on any income that is 300,000. When the amount of our salary exceeds 300,000, it goes into the next bracket of 11% tax rate of the next 300,000 that we are earning, or it could be lower. Let's say somebody is the remaining of the amount is 200. It will be 11% of that 200. Okay, having said that, for this purpose in which we have the chargeable income of 5.8, the next 300 will be taxed, and the person is going to have a liability of another or additional 33,000 taken away from his or her salary. Then we are going to have the next rate to be 15%. And see, please don't crack your brain about the tax rates. You will see that it's graduating by 4%. So from 7 to 11, from 11 to 15. So you can guess what is next. So 15% now is no longer on 300. It's now on every additional 500. So 500,000 will be taxed at the rate of 15%. Please don't forget, all these tax rates are standard. They are standard. So that 15% of 500 will give us 75,000 tax liability. We are not going to take this one home. Government is taking it from source. Then the next will be 19%. Just as you guess right. Still another 500,000 that we had earned. And if we calculate it right, we are going to see that the 19% is going to give us 95,000 tax liability. So all these are being taken away from our salary. Is somebody saying whether we like it or not? Of course, yes. So it's going to be taken away from our salary. Then it will still have, just as we have this tax now, example of 5.8, the person is still going to be taxed more using the rate of 21% now. So it's no longer graduating at 4%. So it's 21 now. So that means it graduates using additional 2 of 1.6 now. 1.6 million of that will be taxed. And if we calculate it right, we are going to have figure measures 336,000 additional tax liability being paid to the government. Last but not the least of the tax rates, the final leg is 24%. The final leg is 24%. So every other thing is on 24%. And I'm telling you the truth, when I get to this tax rates, I'm not too comfortable again in employment, because as an accountant, I see it as a quarter of my salary being taken away by somebody that I could not even identify on the road. So, but it's important for us, like the last video of the theoretical, I told us that it is in your interest to know how your tax is being charged. So the last will be the 24% of anything more. So if we add this together, first of all, we are going to observe that all these 300 plus 300 plus 500 plus 500 plus 1.6 will give us 3.2. So after the 3.2, any other thing that we earn will be on 24% now. So the computation that we are having before is 5.8 for 8,000. Or is that million? Okay, 5.8 million. Now we are going to take 3.2 that is all these ones that we've added before from the remainder. And you know what, if we calculate it very well like the figure marshals we do, we are going to arrive at 2.648 as the remainder of 5.8, and this 2.6 will be charged using 2.424 rates as the tax rate, and the figure of our tax liability on this will be nothing less than incredible 635,000 plus exact figure. This is what we are going to have. So in total now, the taxpayer is going to be paying or parting with 1.195,520 of his or her salary. So Mr. ABC or Mrs. ABC is going to give over 1.1 to government. So this is on annual basis. So if we are paying 1.1 plus as our annual tax, so from that 8.4, 1.1 is going to leave. It's not even going to touch our hands. That is the truth. So what will now be the monthly, calculating the monthly tax payable on 8.4. The person is going to be paying 99,626,000 and a few coin. Okay, so this is going to be monthly, deducted from monthly salary. So therefore, anybody that is earning 700,000, don't forget the monthly salary of this person is 700,000, and he or she will not take home 99,626.67. Then class, I'm giving this up to us as assignment. What is Mr. ABC or Mrs. ABC taking home? So this is how to actually calculate tax payable on personal income tax that we call pay as you earn. So Mr. ABC is earning 700,000. 99,000 is going to be taken away from his salary, and the rest will be what he or she is taking home on monthly basis, just as on yearly basis the income will be 8.4 and 1.1 plus will be given to government. The rest he or she will be taken away. So please calculate what the rest is going to be from GJAMES channel. Inbox, let us know the figure that you get. Don't forget to subscribe, click the notification, click all, so that you are going to be notified immediately we put on another video that you could trust is going to be enlightening and towards the success of your professional career. Gbenga Olatunji has been speaking. Next, we are going to be looking at another important topic. So don't forget to subscribe. We are value to life. We are value to your businesses.